anybody who doesn't own physical gold is making a mistake. You don't have to own a lot. Traditionally, when gold performs, it performs so well that as insurance, a small premium buys a lot of coverage. I personally don't see a circumstance where the deterioration in the purchasing power of the US dollar on an absolute basis, not relative to other currencies, doesn't increase. That circumstance, history suggests that a prudent accumulation of gold is on order. In the very near term on the gold theme, I think what we've seen is relative strength in the US dollar relative to other currencies, and I think that continues. I think the US dollar is, to quote Doug Casey, the prettiest mare in the slaughterhouse when you compare it to the euro, the yen, the Canadian dollar, the Australian dollar. It's on an absolute basis, US dollar savings for US investors, that it becomes problematic. My prognosis for silver has more to do with my experience, my observation. I don't, and I don't know anybody who does, really truly understand the silver market in terms of the why. I've been trying for 45 years. But what I do know how to do is observe. And my observation tells me that precious metals bull markets are led by gold. And when the generalist investor begins to be attracted to the precious metals narrative, normally because of the momentum established by gold, when that generalist investor comes into the metals market, leadership in the market transfers from gold to silver. So that transfer seems to take place sort of halfway through a bull market, and we haven't seen the transfer come to silver yet. And I don't know why the transfer does. I assume because of the reputation that silver has for more volatility, which attracts the greed buyer, and also for the lower unit cost, which attracts retail buying in emerging and frontier markets from holders who are unable to store wealth in gold. As I say, I don't know why it happens. I just know that it happens. The last to move traditionally have been the higher quality silver equities. And my observation has been that there is not enough market cap in that category to stand the inflow of generalist money when it happens. So the upside that occurs in the higher quality silver stocks is absolutely insane. To illustrate that, my first bull market was the 1970s, and I watched but sadly didn't participate. As an example, Coeur d'Alene going from 10 cents to $65. Not a typo. In the market in the early part of the 90s, I did participate. We financed Silver Standard at 72 cents. In 6 years, it was over $40. We financed Pan American at 50 cents. In 6 or 7 years, it was over $40. The upside that people who have the patience and the stomach to endure the volatility, the upside in the high quality, small silver equities is stunning. It isn't for people who aren't willing to hold a stock over a long weekend. You know, the narrative is a long-term narrative, and if you apply short-term tactics to a long-term narrative, you are your own victim. And I don't know if this is going to occur in a year or 2 years or 3 years. I don't even know that it's going to occur. I just know it's occurred 4 times before in my career. And the outperformance of silver and the silver equities relative to gold, when the narrative comes into precious metals, is truly spectacular.
Rick Rule's insights into the silver market come with decades of experience and observation. Silver, unlike many other commodities, has a peculiar market behavior that remains somewhat enigmatic even to the most seasoned investors. Rule candidly admits that understanding the why behind silver's movements is a challenging task, but observing its behavior over time reveals undeniable patterns. Today, we'll delve into these patterns, exploring silver's historical performance, its connection to gold, and its potential for future growth. Silver's price trajectory is often tied to gold's, particularly during precious metal bull markets. Historically, gold tends to lead the way, capturing the attention of both institutional and retail investors. This momentum acts as a gateway, eventually pulling generalist investors into the silver market. Once silver begins its ascent, it often outpaces gold in terms of percentage gains, earning its reputation as gold on steroids. But why does this happen? One plausible reason is silver's volatility. It's a double-edged sword. While the metal's price can experience significant upward spikes, it's also prone to sharp declines. This characteristic attracts speculative and greed-driven buyers who are eager for outsized returns. Additionally, silver's lower price point compared to gold makes it more accessible to retail investors in emerging and frontier markets. These investors view silver as a practical and affordable way to store wealth, especially in regions where gold is financially out of reach. Rule recounts the spectacular rallies in silver during past bull markets. For instance, in the 1970s, silver-related equities experienced meteoric rises. He cites Coeur d'Alene, which skyrocketed from 10 cents to $65, a jaw-dropping 650-fold increase. Similarly, in the early 1990s, companies like Silver Standard and Pan American Silver saw exponential growth, rewarding patient investors who endured the market's volatility. These examples underscore the immense potential for high-quality silver equities to deliver outsized returns. However, they also highlight the necessity of a long-term investment mindset. Short-term tactics often lead to missed opportunities in a market characterized by dramatic fluctuations. While central banks have traditionally focused on gold as a reserve asset, there's growing speculation about their potential entry into the silver market. Rule points out that silver's historical underutilization by central banks stems from its lesser liquidity and limited use as collateral compared to gold. However, if central banks, particularly those in countries like Russia, begin accumulating silver, it could introduce unprecedented volatility and upward momentum in the market. Putin's Russia, for example, has shown a willingness to challenge traditional economic norms. While there's no concrete evidence of Russian central bank participation in the silver market, the possibility remains intriguing. If a central bank were to allocate significant resources to silver, it could signal a major shift in the metal's strategic importance. The conversation around silver cannot be divorced from broader discussions about currency and geopolitics. Rule emphasizes that while the US dollar remains the world's dominant reserve currency, it faces increasing challenges. The politicization of the dollar through mechanisms like sanctions and the weaponization of the SWIFT system has driven countries like Russia and China to explore alternatives. However, a full-fledged BRICS currency replacing the dollar seems unlikely in the near term. Instead, Rule envisions a scenario where bilateral trade agreements bypass the dollar, settling instead in gold or other mechanisms. Ironically, many of these transactions may still ultimately settle in dollars, highlighting the currency's enduring influence. For those willing to weather the storm, silver equities offer a unique opportunity. Rule advises focusing on high-quality, small-cap silver mining companies, which have historically delivered astronomical returns during bull markets. However, this strategy requires patience, a strong stomach for volatility, and a willingness to hold through market cycles. As we transition to the second part of our discussion, we'll explore the broader implications of silver's role in a diversified portfolio and its potential to serve as a hedge against inflation, currency devaluation, and geopolitical uncertainty.
The fact that President Putin, or for that matter, President Trump, says something doesn't make it true. The cynical side of me says you can tell that politicians are lying when their lips are moving. We haven't seen any evidence of Russian participation, Russian central bank participation in the silver market, although it's possible that they're merely buying Russian production. If you began to see central bank participation in the silver market, then I think you'd see much more upside volatility. Traditionally, silver has been of less use to central banks because, among other things, borrowing secured by silver on global markets hasn't been as generous or well established as the utilization of gold for collateral, as an example. And traditionally, the central bank's motivation has been as a store of wealth and a medium of exchange, rather than for speculative purposes. Maybe that Mr. Putin has observed the upside volatility of silver relative to gold and has decided that he's a good speculator and that he should allocate the commonwealth of Russians to assets that he believes are going to go up in price. This has not traditionally been a central bank activity, but he's certainly not a traditional politician. We're a highly competitive society, but we aren't yet winning the race to the bottom. The Europeans are more efficient at debasing their currencies than we are, as are the Japanese, as are the Chinese, as are the Canadians, as are the Australians. I think we'll continue as the world's reserve currency. And I think that our currency will likely outcompete a composite basket of other currencies. I think there will be periods of time when other currencies are oversold relative to the US dollar. And I think that there will be opportunities for diversification for American investors into other currencies. But in direct answer to the question that you asked. I'm 71 years of age. I expect that the US dollar will be the world's reserve currency for the rest of my life. And for the record, I'm pretty healthy. And I think that on balance, if you compare the US dollar to other currencies, particularly the euro, that the US dollar will continue very strong. I think that rather than seeing a real BRICS currency, what you will see is a settlement mechanism outside of the US dollar for bilateral trade among countries that have learned that they can't trust the US. The Russians, certainly, who were victimized by our stealing $300 billion worth of their treasury security. Whether or not you agree with their moves in the Ukraine, we did steal $300 billion worth of their assets, which doesn't engender trust. And nations that are concerned about the politicization of the SWIFT banking system, the ability of the US dollar to affect extraterritorial policy through US dollar exchange mechanisms. I think that you'll see bilateral relationships outside the US dollar. And I think that ultimately those flows will ironically settle in US dollars after the fact. I hope that helps.
As we delve deeper into the dynamics of the silver market, let's unpack the multiple dimensions of its volatility, potential, and broader relevance in the evolving global economy. Rick Rule's observations about the transformative nature of precious metals markets hold immense merit, especially in an era where geopolitical tensions, economic uncertainties, and structural shifts in financial systems create fertile ground for significant movement in these assets. One of the standout features of precious metals bull markets, as Rule astutely notes, is the transfer of leadership from gold to silver. Historically, this transition is not just a financial phenomenon, but also a psychological one. Investors, especially generalists, begin their journey in the metals market through gold, a universally recognized store of value. Gold, with its historical precedent and inherent stability, often acts as the gateway asset for those cautious about entering the volatile territory of precious metals. But as the momentum builds and the narrative solidifies, attention inevitably turns to silver. Why? Silver's appeal lies in its dual role. It's both a monetary and industrial metal. When the generalist investor enters the market, the amplified volatility and lower unit cost of silver attract both seasoned speculators and first-time participants alike. This dual demand amplifies silver's performance relative to gold during these transitions, leading to explosive gains that often outpace gold by a significant margin. Take, for instance, the silver bull market of the 1970s. During this period, silver's price movement was nothing short of meteoric, largely driven by speculative fervor and a broader economic narrative of inflation and uncertainty. Fast forward to recent history, the early 2000s and the post-2008 recovery saw similar patterns, where silver's gains often dwarfed those of gold. Rule's anecdotal evidence, like Coeur d'Alene Mine's rise from 10 cents to $65, serves as a testament to the potential magnitude of such transitions. The allure of silver equities, particularly the higher quality ones, is another layer of intrigue in this narrative. These equities serve as leveraged proxies for the underlying metal. Their potential for outsized returns stems from their sensitivity to silver's price movements. When silver prices surge, the profit margins for mining companies expand exponentially, translating to massive stock price gains. However, this potential comes with a caveat: volatility. Silver equities are not for the faint-hearted. They demand patience and a long-term perspective. For those willing to endure the market's whims, the rewards can be staggering. Rule's experience with Silver Standard and Pan American Silver, both of which delivered multi-thousand% returns, is a case in point. These examples underscore the importance of timing and conviction in navigating the silver equities landscape. One of the intriguing aspects of the current market environment is the potential entry of central banks into the silver market. Traditionally, central banks have focused on gold as their primary reserve asset. Gold's historical role as a monetary anchor and its utility in providing collateral for sovereign borrowing make it a natural choice. Silver, on the other hand, has not enjoyed the same status, largely due to its lower monetary profile and higher industrial usage. But the tides could be shifting. As Rule speculates, the entry of central banks into the silver market, even in a limited capacity, could be a game changer. Such a move would not only validate silver's role as a strategic asset, but also introduce a new layer of demand that could exacerbate supply constraints. While there's no concrete evidence of central bank participation in silver markets yet, the mere possibility adds an intriguing dimension to its future trajectory. The geopolitical landscape is another critical factor shaping the silver narrative. Nations like Russia and China are actively diversifying their reserves away from the US dollar. This shift is driven by a combination of economic pragmatism and geopolitical necessity. The weaponization of the US dollar, evident in sanctions and the freezing of foreign reserves, has underscored the need for alternative reserve assets. In this context, gold has been the primary beneficiary, but silver's unique properties, both as a monetary asset and an industrial metal critical for technologies like solar panels and electronics, make it an equally compelling choice. Russia's potential interest in silver, as Rule humorously suggests, could be a speculative play by President Putin. However, it also reflects a broader recognition of silver's strategic value in a multipolar world. The US dollar's status as the world's reserve currency remains a double-edged sword. While it confers significant advantages, it also comes with vulnerabilities, especially in an environment of rising deficits and debt. Rule's perspective on the dollar's relative strength is insightful. He acknowledges that while the dollar remains the least dirty shirt among global currencies, its long-term trajectory is fraught with challenges. The rise of alternative settlement mechanisms, such as the BRICS nations exploring non-dollar trade settlements, is a testament to the growing desire for a more balanced monetary system. While a full-fledged BRICS currency remains a distant possibility, these developments highlight the diminishing trust in the dollar-dominated financial architecture. For silver investors, this evolving landscape presents both risks and opportunities. Investing in silver is not just a financial decision, it's an emotional and philosophical one. The market's inherent volatility can test even the most seasoned investors. But for those who understand its nuances and are willing to weather the storms, the rewards can be extraordinary. Silver's appeal lies in its ability to act as a hedge against economic uncertainty, a store of value, and a speculative asset all at once. Its lower price point compared to gold makes it accessible to a broader range of investors, particularly in emerging markets. This democratization of silver investing adds a unique dimension to its market dynamics. Looking ahead, several trends are likely to shape silver's trajectory. Technological demand, the rise of renewable energy and electric vehicles will drive demand for silver's industrial applications. Its role in solar panels in particular positions it as a critical metal for the green energy transition. Monetary policy, central banks' actions will continue to influence precious metals markets. As inflationary pressures persist, the appeal of hard assets like silver will only grow. Geopolitical uncertainty, ongoing tensions between major powers will underscore the importance of diversifying reserves into non-dollar assets. This trend could indirectly benefit silver. Market psychology. The generalist investor's eventual entry into the silver market will likely trigger a new phase of price discovery, characterized by heightened volatility and significant upside potential. If you're considering investing in silver, remember that it's a journey, not a sprint. The market's volatility can be daunting, but it's also what creates opportunities. As Rule eloquently puts it, the key is to align your tactics with the narrative. Silver's story is one of resilience, potential, and transformation. By understanding its intricacies and staying the course, you can position yourself to reap the rewards of this fascinating market. As always, we encourage you to do your research, stay informed, and make decisions that align with your financial goals and risk tolerance. The road ahead may be uncertain, but for those willing to embrace the journey, silver offers a unique opportunity to be part of a compelling narrative in the world of precious metals.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.